In today's video, I will be breaking down two trades I took this morning, and both of them were longs. Both of them were with 3 contracts, and both of them worked out very beautiful. They worked out perfectly. And today's just going to be breaking down the trades. As I'm playing the trading video, I will be talking about my consistency and other things related to trading in that sense. And let's get into it. First trade. It was a long. I enter in, and the reason why I entered in is because on the 5-minute you have it about to break this momentum shift as it's way above the fast moving averages. Over here on the 1-minute, same thing. On the 2-minute, you're kind of getting into that resistance from the fast moving average, but once I saw it close right there, I'm like, okay, I'm gonna hold in. And what do you know what happens? I start scaling out. As it breaks the momentum shift, it starts shooting up, which is really good. And yeah, that's what I wanted. It broke the momentum shift on the 5-minute, broke the fast moving average on the 2-minute, and broke the momentum shift on the 1-minute again. Came back down, but this is why you scale to capture the most profits. And that was the first trade. Very beautiful trade. Worked out really well. Scaled it out. The reason why I scaled it out and tried to capture the most profit is I could have just closed it off at 3 contracts, but you have a decision to make when it's going into the fast moving averages. As resistance on the 2-minute is you have the resistance on the 2-minute, but on the 5-minute and 1-minute you have like this huge gap from the moving averages to run up. So the reason why I scaled out is I wanted to take contracts off at profit, but at the same time not fully get out of the trade, just in case if it just decides to break through the resistance and shoot up even higher. So that was that risk management done very beautiful in my opinion. And let's get into it on the second trade. So just letting the clip play out, and we should be on the second clip. Yep, here we are on the second trade. Enter in, and I enter in with 3 contracts as usual. This time I'm gonna play different, and I'm gonna let it go up and then start trailing. Same thing, the reason why I started putting my stops in. 2-minute, you're heading into that resistance. You're heading into this line of resistance from here. On the 5-minute, you're same thing, heading into the same resistance, and on the 1-minute you are. But on the 5-minute and 1-minute, you have this gap to shoot up. On the 2-minute, you don't. That's why I am placing my stop losses to trail. But here's the reason why I did this is, as I explained just before, or just now, that if it breaks through and continues to run up, I want to take 2 off at my profit gain, which I do. I take 2 off at my profit gain, but I leave 1 kinda break even. So when it does shoot up, like you're gonna see here, I get more profit. And that's what I was trying to do in the previous clip, but obviously it did come back down, take me out. But letting it just play out, leaving 1 at break even, trailing this one to get the most profit. I got the most profit from it. Now I'm leaving this one at break even, because if it breaks this resistance level, then it will continue to shoot higher. And this is that big gap up I'm talking about, where if I took myself out at 3 contracts at the profit gain, I would not be able to have captured the move where it it traces that gap in between the fast moving average and the moving average on the 5-minute, the 1-minute, but on the 2-minute it's pushing through that resistance. So just letting the trade play out, and look at it, shoots up, and this is what I'm talking about. This is why in the previous clip I wanted this to happen, but in this clip it's happening. So this is why I would take 2 off at pure profit at 10 points to get my, pure profit, but I'm leaving 1 at break even to capture if it's either gonna retrace the gap and it's gonna push through the resistance zone, or it comes back down, takes me out, but not at a loss. And I continue to just monitor it, and I'm deciding whether I should just place the stop loss and capture this big retracement on the gap, which I do that in a minute. Right there, put it out, and it shoots even higher because it really broke through that resistance zone. 5-minute closed above the resistance zone, and this is what I'm talking about. That's what I wanted to happen on second clip. Didn't happen. I still made my profit, but it's happening in this clip, and yeah, that's, you capture the most points from that. But that's basically the 2 trades I took. I entered because of the rejection on to the downside on the 5-minute, and it had a a break above the momentum shift on the 5-minute. Decided to take it because the fast moving averages are now going upward. On the 1-minute and 5-minute, there was that gap from the fast moving averages to the moving averages. On the 2-minute, you're pushing through that resistance. That's why I started scaling out my contracts to let 1 hopefully capture the gap, which it did. And yeah, that was a total of my cumulative PL on the top left hand side of the screen. Enclosed PL is 110. And keep in mind, this is just with 3 MNQs. If this was 3 NQs, it would have been an $1,100 trade, and it worked out beautiful. But one thing I also want to talk about is I took longs. I didn't counter trend trade, as we are still in an uptrend. As I explained in my previous videos, we are still going up. I stayed on the right side, going with the trend. This is why, if you saw the clips I showed you when I entered both of them, I barely took any drawdowns. Maybe 2-3 points of drawdown, but that's nothing. I risked that 2-3 points to make like 20 points on each trade, and it worked out beautifully. That's like the best ratio you want when you're trading. But also, I am being consistent. As you see in my previous videos, I'm always up on my trades. I'm being consistent with it. This is on a real money live account as well. This is not sim. And my other trades, I will show if I do lose a losing trade. I will show, but I haven't had one so far, knock on wood. But that's basically, I'm being consistent with it. That's what you have to do in trading. You have to be consistent with it, or you're not going to be successful in trading. Other traders, I've noticed, will have a winning day, but they will also have a losing day, but that losing day will wipe out their earnings on their winning day. And they'll have another losing day, but their winning days won't even be able to capture or bring back as much as they lost on their losing days. So, but my trading, on the other hand, I've been consistent. You are seeing it through the other videos I have, and you can choose who you want to follow, but I'm just showing you the differences between me and the other traders out there. And I take trades at the right time, at the right moment, and at the right entry. As you can see in the 2 clips I showed, I took trades at the right time, at the right entry, where I barely took any drawdowns, and I was, it worked out beautiful. That's trading. And yeah, all you have to be is just consistent with it, stay on the right side, and have really good risk management. That's all it is risk management in trading. You don't have good risk management, you're not going to be successful in trading. But that's about it. Make sure to like, subscribe, and I'll see you guys on the next one.